I want you to just do me a favor. Start for a second. Take a deep breath.
In and out.
Can you feel that? That is the collective sigh of relief coming from global markets. I mean, we are talking about absolute neck-snapping whiplash here. Just 24 hours ago, the mood was, well, pure panic. Sell everything, build a bunker.
Hide your gold under the mattress. Yeah. It was looking incredibly grim. We were effectively staring down the barrel of a trade war between historical allies that nobody actually wanted.
Nobody, and yet everyone was preparing for it. But today, total 180, the S&P is roaring back, yields are dropping, and the immediate threat has just vanished.
Poof.
Gone. So for this deep dive, we are digging into a massive stack of market reports from Wall Street and some really fascinating geopolitical updates coming straight out of Davos. Our mission is to figure out why everyone's suddenly popping champagne, what on earth a golden dome has to do with Greenland.
And, maybe most interestingly, why silver traders are the only ones crying today.
It's a perfect case study, isn't it? How modern geopolitics and finance are just completely intertwined.
You really can't understand one without the other. Today proved that in a big way.
So let's jump right in. The headline is the rally. But to get why everyone is buying today, we have to understand the fear from yesterday. And that brings us to this new acronym I kept seeing in the reports this morning. I actually laughed when I read it. TACO.
The taco trade. It's colorful, isn't it? It was buzzing all over the trading desks.
It stands for Trump always chickens out.
Which is, well, it's certainly one way to frame high-stakes geopolitical strategy. It's blunt.
It sounds a bit dismissive, doesn't it? Is that really how Wall Street sees things?
It's cynical, sure. But in market terms, it describes a pattern, almost an algorithm for traders. The theory is that the administration threatens something catastrophic.
Right, like a massive trade war.
Exactly, to create maximum leverage. The market panics because the threat sounds real. But then, at the last possible second, there's a pivot. A deal is made, the threat is withdrawn, and the administration claims a huge victory.
So the taco theory is basically betting that the bark is always worse than the bite.
Precisely. And if you bet on that pivot, if you buy when everyone else is selling in a panic, you make a lot of money. And we saw it play out just perfectly. Remember, he had threatened 10% tariffs on 8 European nations.
Denmark, France, Germany.
The UK, and others, yeah. Starting February 1st. That was the trigger for the sell everything mood.
And that February 1st deadline was looming large. I mean, that's barely a week away. But then came the pivot in Davos.
Right. Trump met with the NATO Secretary General Mark Rutte, and all of a sudden the tone just completely shifted.
Okay, before we get into the politics, let's look at the scoreboard. Because this relief rally was huge. The S&P 500 jumped 1.2%. That's the biggest single-day gain since last November.
No, that's not a dead cat bounce. That's real conviction. And honestly, the S&P isn't even the most interesting number here. You have to look at the Russell 2000.
It's a small cap index, right? The smaller U.S. company.
Correct. It hit a new high. And it's actually outperformed the S&P for 13 straight days now. That tells you investors are buying growth. They're confident in the domestic economy.
A soft landing is still on the table.
That's what the market is signaling, yeah. When small caps rally, recession risk is seen as low.
And what about bonds? I feel like we always look at stocks, but the bond market is usually the smarter room in the house.
And that's where you really see the sigh of relief. The 10-year Treasury yield dropped about 4.7 basis points. Now, for listeners who don't watch this stuff every day, a drop like that is significant.
It means the fear of inflation has subsided.
Because tariffs are inflationary. That's the basic math, you know. You clap a 10% tax on European goods, prices go up for you. The bond market was pricing that in yesterday. Today, they're pricing it out.
So the taco theory holds water. The market bet the catastrophe wouldn't happen, and they got paid. But why? Why did the administration, pivot?
It all happened in Switzerland. Trump and Mark Rutte had what was called a very productive meeting. And afterwards, Trump announced this future agreement framework for Greenland and the Arctic.
And the tariffs.
Paused. That's the key word. Paused, not canceled. But he explicitly said he would not use military force to take Greenland.
Which, believe it or not, was a genuine fear earlier in the week.
It was. And he said he prefers immediate negotiation. So that February 1st deadline is off the table for now.
Okay, this is where it gets really interesting for me. We're not just talking about fishing rights. The sources keep mentioning something that sounds like it's from a sci-fi novel. The Golden Dome.
It does sound futuristic, doesn't it?
Like something out of a James Bond movie? What is it? Is it an actual literal dome?
No, not a glass dome over a city, no. The Golden Dome is the nickname for a new comprehensive missile defense system the U.S. wants to deploy. Think of it as an upgraded Arctic-focused version of Israel's Iron Dome, but on a massive scale.
And Greenland is the real estate they need for it.
It is the only real estate that matters for this. If you look at a globe, not a flat map, Greenland is the strategic cork in the bottle. It sits right between the U.S., Russia, and China.
Because over the North Pole is the shortest missile path.
Exactly. We think east-west, but the threat is north-south. If you want to monitor the Arctic and intercept hypersonic missiles coming over the pole, you need hardware in Greenland.
So this whole drama, it wasn't just vanity, it was about national security architecture.
That's the administration's argument. Trump called it a critical strategic location. And here's the clever part of the negotiation that the sources are hinting at. Denmark obviously refused to sell the whole island. That's a non-starter.
Of course, it's insulting.
Right. But the compromise seems to be modeled on the UK's relationship with Cyprus.
Wait, how does that work?
So the UK has what are called sovereign base areas in Cyprus. They don't own Cyprus, but they have full sovereignty, total ownership over specific military bases on the island. It's not just a lease, it's their territory.
I see. So the speculation is that Denmark might cede small, specific plots of land in Greenland to the U.S. for these Golden Dome bases.
Exactly. It's a surgical solution. Instead of buying the whole house, you just buy the corner of the yard where you need to build the shed.
That is actually a fascinating political maneuver. It lets everyone save face.
It's classic diplomacy. Trump gets his Golden Dome and can claim he secured the land he needed. Europe avoids the tariffs, and Denmark keeps sovereignty over the island.
And the market loves a win-win, or at least a nobody loses big scenario.
The market loves certainty. That's the key. And this framework announcement provided that. Trump even called the deal permanent and indefinite.
Which is a bold claim. But let's shift to the winners and losers, because not everything went up. The precious metals market went absolutely haywire.
Oh, it was a wild ride. If you were trading metals, you probably have whiplash today.
Gold was trading near $4,900 an ounce. That's an all-time high.
That was peak panic. Gold is the ultimate fear trade. When everyone thought tariffs were coming, gold skyrocketed. But as soon as the taco pivot happened, it pulled back. Still finished up, what, 1.5%? But it gave back those highs.
But silver, what happened there? It didn't just pull back, it fell off a cliff. It plunged nearly 5% at one point. Why the difference?
This is a really common misconception. Silver is the trickier cousin of gold. Yes, it's a precious metal, but it's also an industrial metal. It's used in electronic solar panels.
So it has a dual personality.
Exactly. So in this scenario, we saw a massive shift to risk on. People dump safety to buy stocks. That hurts both. But silver gets a double whammy. Because it's so volatile, when traders need cash to buy stocks, they often sell silver first. It dropped below $90 before it recovered a bit.
It really highlights that risk-on sentiment. Amazing how fast it flips. Crypto had a similar V-shaped recovery, didn't it?
It did. Bitcoin and Ethereum looked terrible when the markets were panicking. But as soon as the relief set in, they surged. Bitcoin pushed back toward 90,180. Ethereum reclaimed 3,000.
Which just reinforces the idea that crypto right now acts more like a tech stock than digital gold.
In this market cycle, yes. It tracks very closely with that risk-on sentiment in the tech sector.
Speaking of specific companies, let's dive into some of the corporate movers. I saw Moderna was up 16%. Was that related to the trade deal?
No, and that's a great point for listeners. Even when the macro world is crazy, business goes on. Moderna released new data on their melanoma treatment. It's a skin cancer vaccine, basically.
A vaccine for skin cancer, that's revolutionary.
It is, and the data showed sustained efficacy over 5 years. It validates their whole mRNA platform, beyond the pandemic. The market loved it.
That's huge for medicine. But on the flip side, Kraft Heinz, down nearly 6%. Did people stop buying ketchup?
No, ketchup is safe. This is the Oracle of Omaha effect. Warren Buffett's Berkshire Hathaway announced they're planning a clearance sale reduction of their stake.
Ouch. When Buffett sells, people get nervous.
It's a massive signal. If the greatest value investor in history thinks it's time to reduce exposure, other people head for the exit too.
And then there's Danone, the French food giant, down 8%.
That was a safety scare. A nightmare for a food company. Singapore recalled their Dumex baby formula, bacterial toxins.
Oh, that is brutal, especially with infant nutrition.
Destroys trust instantly. The stock got hammered, and rightly so. It's a reminder that operational risk is always lurking.
One other mover that caught my eye, and this affects everyone's wallet, natural gas.
Oh yeah, a massive spike, up 28% in one day. Broke $5 for the first time since December.
28%. Why the huge jump?
It's a mix. Energy is always sensitive to U.S.-Europe tension, so the Greenland stuff played a role.
Yeah.
But it's also winter dynamics.
Still, that's an extreme move.
It is. It's what we call a short squeeze, combined with panic buying. For you listening, this is the one indicator from today that might actually hit your bank account next month when your heating bill arrives.
Definitely worth watching. Now, there was one more little political nugget. A rumor about the Federal Reserve.
Yes, a classic throwaway comment that moved billions. Trump hinted that he has picked a new Fed chair.
And he said he wants someone like Greenspan.
Right, Alan Greenspan, the maestro. The market immediately took that to mean Kevin Hassett, who was a frontrunner, is now out of the running.
Why? Is Hassett not Greenspan-like?
He's seen differently, more academic. This comment actually caused a brief dip in stocks midday. The market hates uncertainty about who's driving the bus at the Fed.
It's incredible how sensitive the algorithms are.
It brings us back to what David Laut from Carrick's Financial said. He warned that while the market is resilient, it's hypersensitive to headlines. We are in a headline-driven market.
That's a great segue into our synthesis. We have this taco relief, the Golden Dome, but is this really over?
That's the billion-dollar question. Cameron Kreis from Bloomberg posed it well. Is this a policy U-turn, or is it just the art of the deal?
It feels like a pattern we've seen before.
It is the pattern. Threaten the extreme. Create a crisis. Then accept a compromise that you might have been happy with all along, like the missile defense bases, and let the market celebrate you as the rescuer.
You create the fire so you can be the hero who puts it out.
Precisely. And it works. It mobilizes action. Europe was dragging its feet on Arctic security, and now they are at the table.
But it works until it doesn't, right?
That's the danger. David Laut points out that this works as long as the other side plays along. But what if Europe had decided to activate its new anti-coercion tools?
Which they didn't have a few years ago.
Right. If they'd retaliated with their own tariffs, the market resilience could have vanished. We were very close to a real trade war. The risk was real.
So we shouldn't get too comfortable just because the S&P is up.
No, and we have to look at the Arctic context. The obsession with Greenland isn't going away. This is about the great power competition.
The bigger picture that gets lost in the stock ticker.
Exactly. The Arctic is melting. Shipping lanes are opening up. Resources are becoming accessible. The U.S., Russia, and China are all jockeying for position.
So the Golden Dome rhetoric is really just the public face of a much deeper security issue.
It's a military security issue, disguised as a real estate deal. The fact that Trump is calling the agreement permanent shows how badly the U.S. wants to lock this down.
It really puts the relief rally in perspective, doesn't it?
And remember, the tariffs are only paused, not canceled. That is a very specific word choice.
Meaning if the negotiations bog down?
The threat returns. The gun's back in the holster, but it's still loaded.
Right. The taco might be on the menu today, but the kitchen is still open.
I like that analogy. Yes, the kitchen is definitely still open.
So let's wrap this up. What does this all mean for you, the listener? We went from the brink of a trade war to a Golden Dome framework in, less than 96 hours?
The key takeaway is that modern markets are driven just as much by relief, by the absence of bad news, as by actual growth. The fundamentals didn't change overnight, but the fear evaporated.
So enjoy the green numbers, but keep your eyes open.
And keep an eye on those energy bills. Natural gas up 28% is no joke. And also, maybe check your portfolio. That silver versus gold divergence was a real lesson in risk appetite.
Absolutely. I want to leave you with one final thought to mull over. Trump claims this new Greenland framework is permanent and indefinite. In a world where alliances are shifting, where the Arctic is physically changing, can any agreement truly be permanent?
It's a heavy question.
Or is this just a temporary patch, the Golden Dome Band-Aid, if you will, on a heating competition for the top of the world?
History would suggest permanent usually just means until the next crisis.
Indeed. Thanks for joining us on this deep dive. We'll be watching the headlines so you don't have to. See you next time.